Hello and welcome to the video, guys. My name is Brandon, and in today's video we're going to be talking about 3 stocks to buy in May of 2018. We're going to have a look at Facebook, we're going to have a look at the company Cisco Systems, and we're going to have a look at everybody's favorite stock, General Electric. Alright guys, so this is actually my first video in the series of, top 3 stocks to buy in May. And I'll be completely honest with you guys, I'm not a huge fan of these videos simply because, I don't want my viewers or my subscribers or anyone that's watching this video to get the impression that these stocks are going to do very well in May, right? Because that's kind of what the video kind of implies, right? Hey, best 3 stocks to buy in May. And maybe some other YouTube channels are doing that, and that's fine, but I know better than to invest in a stock based off of the expectation for short-term performance. When I invest in a stock, I'm investing for the long term, and I'm investing in it because I believe in the fundamentals of the company, and I believe that 5, 10, or 20 plus years down the road, this company is going to be prospering and doing well, and I want to take part in that growth. So that's why I invest in these stocks. So the 3 stocks that I'm going to be talking about today, guys, I think are all good long-term holds. I'd be comfortable holding them in a portfolio, and I think that they're offering a good source of value right now. And if this is your first time watching, guys, definitely consider subscribing. I post a video every Monday, but let's get on with the video. And the first stock that we're going to be talking about today is Facebook, ticker FB. And I don't think I need to get too into detail, guys, about what's been going on here. We, of course, have the Cambridge Analytica data scandal where, over 87 million Facebook accounts data was, jeopardized and used to potentially affect the elections. We have Zuckerberg testifying in front of Congress. Questions are starting to come up like, is Zuckerberg really human? Is he part reptile? Why is the guy sitting in a booster seat? The amount of memes that are floating around the internet, guys, is actually, nothing short of legendary. But all jokes aside, guys, Facebook stock is down about 14% from its all-time highs. And despite all the drama that's been going on, I do think that the stock is offering a good source of value right now. The question you have to ask yourself here, guys, is, are the fundamentals of this company changed? And don't get me wrong, I'm not trying to underemphasize the importance of this incident, but really, how does Facebook make their money?
We believe that we need to offer a service that everyone can afford, and we're committed to doing that.
Well, if so, how do you sustain a business model in which users don't pay for your service?
Senator, we run ads.
I see.
Come on, Senator. This guy clearly doesn't use Facebook. He obviously didn't do his homework here. But yes, guys, Facebook runs ads. That's how they make their money. And I understand that there are some people that are pretty upset with what's going on. And of course, there is this whole, delete Facebook hashtag, which was pretty much a fail. But I sure as hell know that I'm not planning on deleting my Facebook account, nor are 99% of my friends. We're still going to be using Facebook and scrolling through Instagram pretty much all day long. So as an advertiser, and I don't care if you're Nike or you're like a local plumbing business, even me, man, I run ads here and there. You're gonna go to where the largest audience is. And really, as of right now, there's 2 main options, right? You have Facebook, of course, a huge player, and then you have Google, right? Google with their AdSense program and YouTube and whatnot. Those are really your 2 main players. And then, of course, you do have options like Snapchat and Twitter. I believe LinkedIn now is running ads, but those don't even come close to comparing. Facebook has over 2.1 billion monthly active users. It is the largest social networking platform in the world. Instagram is growing at a very fast clip, guys. Especially if you're trying to reach, our demographic, the younger demographic. Instagram is the way to go. And as an advertiser, I don't really think there's a question that Facebook is still going to be your go-to choice. And in my opinion, as much negativity as there is surrounding this data incident, I don't really think that's gonna change. And until another website or platform can really build up, a respectable enough audience to seriously threaten Facebook to start stealing away some of their advertisers, I think the company's gonna continue doing what they're doing. I think they're gonna continue to report strong numbers. They're gonna continue to generate revenue from their ads. They've had a ton of success of monetizing their mobile platform, which was, one of the big issues or concerns with Facebook. And for that simple reason, guys, from a fundamental standpoint, I think that given the current share price, Facebook is offering a good source of value. Now, an important thing to note, guys, is that Facebook does report their earnings in 2 days. So leading up to that, maybe we'd expect to see some more volatility. You never know. But as for the business side of the company, man, I think they're still going to report relatively strong numbers. Let's not forget that last year they grew their revenues by 47%. This stock is up over 500% over the past 5 years. They trade at a PE of 30 versus the industry average of 51. The company doesn't pay a dividend. But as for now, guys, like I said, until another company can come in and seriously threaten Facebook, at that point, maybe I would reassess. But as for now, I think that Facebook is a good buy. Moving on to the second stock for this video, guys, Cisco Systems. And actually, guys, fun fact, at one point, back in the early 2000s, back when the rise of the tech stocks, the tech crash, Cisco was actually valued as the largest company in the world. But Cisco is essentially a technology conglomerate. They are the largest networking company in the world. They provide, various services. They develop a bunch of hardware, routers, switches, and whatnot. The stock is up 15% year to date. And there's really three reasons that I'm going to be talking about today as to why I'm liking this stock. First things first is their business model. So as of their most recent earnings report, guys, the company is generating about 33%. So a third of their total revenues is coming in as recurring revenue. So management has made, the big decision to make, kind of a shift or transition away from the traditional, hey, we're going to sell you this product, we're going to sell you this hardware, to really focusing on managed services where they can charge, a fee or a subscription for the services that they're providing. And in my opinion, man, there are so many positives to having a business model like this, but mainly, clearly, of course, having that recurring revenue really helps with providing stability within the company, which is often then reflected within the share price. We think traditionally of some companies, guys, that are very reliant on selling, a specific hardware, hey, I need to sell you this computer. And especially, when recessions come around and people are less likely, consumers are less likely to go out and spend, companies that rely on these, product sales very heavily, they can be quite vulnerable in these times. And what we're seeing is a lot of very successful companies shifting to this business model. We think of Apple, for example, which has, their ongoing subscriptions, things like, Apple Music and, iCloud. Another good example is, the company Adobe, right? Adobe used to sell, back in the day, they'd sell you a program, right? Here's Photoshop, and, you buy it outright. But now if you go to their website, man, pretty much everything you buy there is on a subscription or a month-to-month basis. And to have that recurring revenue as part of your business model, to me, is a huge benefit. So I think that with Cisco, management has done a good job transitioning to that. The second point that I want to talk about is their dividend. And Cisco actually pays a very attractive dividend, currently yielding about 3.01%. They actually only started paying a dividend back in 2011, which was at 6 cents per quarter. And over the course of 6 to 7 years, they've gradually increased it every year, and currently it's sitting at 33 cents per quarter, which, like I said, is yielding right about in that 3% range. So whenever you have a tech stock that's paying you a nice dividend like this, always a nice bonus, and it's well above the industry average at 2.1%. Also to mention, and most importantly, in my opinion, it just really goes to show that the company really is transitioning into this stable, mature and reliable, sustainable company, let's say largely in part to their business model, and they're able to reward the shareholders for that, which is great. The third positive that I want to talk about with Cisco is their history with mergers and acquisitions. In fact, I believe that Cisco was actually ranked in the top 20 companies worldwide in terms of M&A activity, and over the years they have a very respectable track record when it comes to this space. And this to me is very important for a company, especially like Cisco, which does face a lot of competition in their space. The fact that the company is known and willing to spend and invest in terms of M&A, that really allows them to fill some niche areas that they may not already be in. And I mean, the company already does have a very broad range of services and products that they do provide. But if there's a new area or new technology or new trend that comes up that maybe they're not exposed to, I feel very confident that management can make the right decisions, the right moves to get into those spaces, just so they don't get left in the dust. And not to mention, the company does have the cash flow to do so. Last but not least, guys, one more little positive. As with a lot of U.S. companies, they're really benefiting from the U.S. tax reform. They're planning to bring over or repatriate about $67 billion from overseas as well. They're planning on executing a $25 billion share buyback. So they're definitely taking advantage of that, guys. But all in all, I do think that Cisco has kind of transformed itself into a reliable, stable company. Man, it pays a 3% dividend, nice juicy dividend. So I'd be comfortable holding this stock for the foreseeable future. Moving on to the third and final stock for this video, guys. And if you've made it this far in the video, first of all, thank you. I really do appreciate everyone that watches. And I really hope that you're enjoying and getting good value from this video. And secondly, I really want you guys to pay attention, because not only am I going to be talking about the stock, but I'm also going to take this as an opportunity to kind of touch on my investment philosophy and how I go about investing. So the third stock for this video is General Electric, ticker GE. And if you're the type of person to hear the word GE and just immediately dislike the video and go leave a nasty comment, then go ahead and do it and then get out of here, right? Buzz off. I want my viewers and subscribers and anyone that's watching this to at least be open to hearing what I have to say, hearing my thoughts on this company, and then go make a decision for yourself. So let's get into it. Over the past year, guys, GE stock is down about 55%, all right? It has clearly been the worst performer in the Dow Jones, and the company has basically been on pretty much a landslide to hell. And rightfully so. The company has been facing really all sorts of issues, from their pension obligations to a bunch of underperforming divisions. Just last week, they reinstated their earnings for the past 2 years. There were some discrepancies there. They've been under SEC investigation for some questionable accounting practices. I mean, the amount of negativity surrounding this stock is real. And if you watched my video that I did back in the beginning of the year, 3 stocks that I'm buying in 2018, I talked about how, firstly, I didn't think the company was going bankrupt, which was a serious concern for some people. I talked about how I did think the company was going to turn things around. And most importantly, I talked about how the new CEO, John Flannery, I thought he was making the right decisions to get this company back on track. And thus far, I think he's actually done a very good job. Let's not forget, guys, that he only came into power in August of 2017. So what is that, like 7 or 8 months ago? And a lot of the issues that GE's facing, the ones that we're hearing about in the news, the underfunded pensions, the reinstated earnings, which really isn't the biggest deal. But a lot of the stuff that's going on right now, guys, it's kind of out of his control. And to be completely honest, a lot of these problems have been stemming and brewing, long before he came into power. So to expect a new CEO to come into a company, man, especially a company that's this distressed, and have an immediate fix or an immediate impact, I think that's a little silly to expect, right? It's a little far-fetched. But let's take a look at what he has done. They reduced their board members down from 18 members to 12 members, including 3 completely new members, right? So they're doing a bit of a corporate restructuring here to really get in line with this turnaround, to get in line with John Flannery's views, because clearly, guys, what they had going on before wasn't working so well for them. The company decided to cut their dividend, which, as we know, guys, companies do not like to do. But at this point, man, the main priority for GE is getting the company back on track. And I think that everyone can agree that cutting the dividend was a necessary move. But most importantly, guys, management has made the decision, the effort to focus in on the areas of the company that are doing well, i.e., the aviation division, the healthcare division. Really focus on making that, the new core of the business, and kind of getting away and trimming back, on the areas that aren't doing so well, right? They've been actively looking to, sell off some certain divisions. There's the potential for some possible spin-offs or some deals that they're going to work out. But really, guys, just understanding that, yeah, they are too spread out, and they really do need to start cutting back in certain areas. And just for your reference, guys, GE reported earnings on Friday. They beat their estimates, right? Granted that they were already relatively low, but they posted adjusted earnings per share of 16 cents, which was a surprise to the upside. Like I said, relatively healthy numbers in the aviation division, the healthcare division. They're still struggling in the power division, which is a huge part of their core business, and it's something that they're going to continue to work on. But the question I ask myself here, guys, is the company going bankrupt, and do I see them turning this company around at some point in the future? And the answer, in my opinion, is no, I don't think the company's going bankrupt. And yes, I do think that the company is gonna find a way to turn things around. And feel free to agree or disagree. But for the sake of this video and for the sake of this analysis, let's assume that the company will at some point turn things around. Now, let me bring up a chart here, guys. This is a 10-year chart of General Electric. And as we can see, on the left over here, we have the financial crisis, right? Of course, back in 2008. And here towards the right, we see the most recent drop. This is where we currently stand today. Now, let me ask you more or less a philosophical kind of theory related question, all right? Given this time period, where would have been the best place to buy? The answer to that is quite simple, right? Right over here at the bottom, right in at this, what is this, at the $8 mark, all right? That would have been the perfect, ideal time right at the bottom. Very difficult to do, but that is the most ideal time to buy, all right? Now, over the course of this, what is this? This is a decade or 8 years. The shares reached a high of, let's call it $31, all right? So that would have been an awesome investment, right? And of course, very easy to say looking back in hindsight. But you know, even if you didn't get in right at the bottom, right? Let's say you got in around $10 or even, you know, $9 or $12. Basically, let's just call it, you know, this general area. Well, that's still a pretty awesome return on your investments, all right? Not to mention the dividends that you'd be pulling in as well. Now, I bought my first shares of GE a couple months back in February for around $16, all right? Today, GE is trading for around that $13 to $14 range, right? And there's really two ways that you can go about looking at this. One investor may look at this and say, you know, Matt, my shares are down, what is it, 15%. I've lost a bunch of money. You know, maybe I should go sell my investments, go take my money elsewhere, right? That's the way one investor may look at it, and fair enough, all right? But for me, as a long-term investor, I kid you not, you know, I could care less what happens over the next, you know, month, over the next 3 months, even over the next 6 months. Really. My goal as a long-term investor is to acquire as many shares as I can for as low of a price as I can, and at some point in the future, sell them for as high of a price as I can, right? I'm trying to profit off of that spread. So the fact that these shares have dropped, 15% since I first bought them, to me, you know, that just represents, you know, a potential opportunity to really go in and, you know, acquire some more shares, you know, bring down the average cost of my shares so that at some point in the future, you know, assuming this company is able to turn things around, I can make the most spread on my dollars, on my investment. Buy low, sell high. Let me bring back up this chart, guys, and hypothetically, right, if at some point we can agree, all right, the share price may reach back to these levels over here, you know, although we may not be at the very bottom now, which again is almost impossible to time, getting in at these levels would be an awesome entry point. And again, guys, this is assuming the company is able to turn things around. But my goal as a long-term investor is to get in at these levels. So that's why I'm comfortable chipping away at my position, you know, being patient and understanding that this could take a while. And as cheesy as this sounds, guys, I want to quote here my favorite quote by Benjamin Graham. He says that the intelligent investor is a realist who sells to optimists and buys from pessimists. And I'll tell you guys, there is a lot of pessimism surrounding this stock right now. And I get it, you know, it's such a difficult thing to do, you know, to buy a stock that, you know, seems to just go down or trades flat or all you're seeing is red. Nobody likes that feeling. And that's why you'll typically see investors lean towards, you know, the hot stocks, the stocks that are doing very well. And, you know, maybe that may provide you with some success over the short term. But I think a much better long-term strategy is to invest in stocks like this, which may take years to pan out, but are showing a source of value. And I think with GE, guys, you know, majority of the negativity has already been priced in. You know, there's still a lot going on with the stock. There's still, you know, a very negative vibe. So I wouldn't be surprised if things stay relatively hostile. But I do think that the company has begun this turnaround process. We got management saying things like they're starting to see progress, you know, one step at a time. And you really have to think of the big picture. And I really do hope that at some point in the future, whether that's a year from now, whether that's 3 years from now, whether that's 5 years from now, you know, I can look back on this exact video and be like, man, you nailed it. You got in at an awesome point. You bought the stock when everyone around you was selling. You were able to strip the emotion out of investing. You were patient and you did exactly what you were supposed to do. So guys, those are my 3 stocks for the video. I really hope that you guys enjoyed. If you're not already subscribed to my channel, definitely consider subscribing. I post a video every Monday. And as always, if you have any questions or comments, leave them below. I'd be happy to answer them. And I thank you guys all for watching, and I'll see you in the next video.